Want to go over the real estate market right now and what markets are the best markets to be looking at. If you're looking to, whether you're a new investor or experienced investor, what markets are the best markets for you to jump into right now? What are the best markets to avoid and why? All right, so let's jump into the data here. So inventory has actually dropped. National inventory, that is, dropped slightly this week here to 552,236. Outsource Research, who does a fantastic job, is projecting it to be just under 500,000 at year end, which will be extraordinarily low inventory. Not quite as low as 2022, the beginning of 2022, but not far off of it. The one thing we do have some headwinds, right? Some things working against us, like higher interest rates. Last year at that point, they were 2.75. Right now they're 5.4%, which is still historically low, but quite a bit higher than it was to start 2022. And so what markets should you look to go into? So right now, the markets that are facing the most headwinds, that have the most inventory increase, you have Phoenix, you have Boise, Idaho, and you have Utah. So mostly the Salt Lake, but also in different markets outside there, and Austin, Texas. So those markets have been hit pretty solidly, especially recently here with increased inventory. Dallas to an extent, but Dallas just has way more industry and way more going on for it compared to those other markets. I mean, there is a lot of Silicon Valley in Austin, obviously, and there are jobs there, don't get me wrong, but Dallas is just so much bigger of a market with so many more jobs, so many more blue collar working class jobs. So the higher the market, the higher price the market, the more quickly it'll be affected. Right now, the markets we're seeing being affected, besides Hawaii, you have San Jose, you have San Francisco and Oakland, and both those markets, or all those markets, are near $1 million or over $1 million for purchasing properties. So those are getting hit pretty good, and inventory has jumped up in all those markets. Boise had this huge increase over the past couple of years, big boost. And when you go up really, really fast like that, you could come down pretty darn quickly. It was a saying, the bull goes up the stairs and the bear goes out the window. Which one goes quicker, right? It's always the down market that goes quicker. And really, it's just basic macroeconomics. It's supply and how much supply is available compared to the demand. Those markets that are still doing extraordinarily well. I mean, you got Boston. They don't have any inventory up in that area. That's more the suburbs of Boston. Very hot market. Suburbs of Philadelphia, in Philadelphia itself, parts of New Jersey, especially South Jersey and shore points, doing extraordinarily well. Tennessee, North and South Carolina, and Florida still. And all those states have very, very low inventory. That's what they all have in common. So obviously it's a basic macro, supply and demand. And if there's not enough supply, the demand is still there. You're going to have prices still increasing. As soon as you get past that equilibrium where you have more supply than demand, the prices start falling pretty rapidly. So you're going to have markets towards the end here, 2022 and in early 2023, that really get hit pretty good, maybe 10, 15, 20% next year. You'll have other markets that go up 10, 15, 20%. And you'll have a bunch of stagnant markets as well. So what Altos is predicting, a rather flat market, maybe slight increase, but basically a flat market for 2023. And Fannie Mae is predicting a 3.1% increase. Freddie Mac is predicting a 4% increase. And Redfin is predicting anywhere from 0 to 4%. So they're giving themselves a little bit of window there. And I did not check and see what Zillow was doing, but I still believe Zillow was in the positive for 2023. Like I said, it's going to be very different from market to market. And so the title of this is, which markets do you want to be in? The best markets to be in, obviously, are the ones with lowest inventory. So you're going to have to research that and see what's going on there. But based off what we have right now, the Carolinas are going to be great. Still think Indiana and Ohio are great markets, great linear markets. Michigan, parts of Michigan maybe got overpriced a little bit. You have Oklahoma, I think is still affordable. If I didn't say it, Tennessee. I still like Texas. Alabama's still red hot. Georgia's still good. Florida's still good right now. But there were many markets that got they just went up too quickly. in different parts of Florida, like Northport, Charlotte, that just south of Sarasota area. Those markets had, and Tampa. Tampa was the hottest market for the longest time last year. And then Miami. Miami is a big boom market, but it also goes bust if there's enough inventory. There's a lot of wealth in Miami compared to Tampa. So somewhat protected, a lot more cash buyers there than there are in Tampa for sure. But Tampa is a great rental market, and areas outside of Tampa, like Lakeland, are great rental markets. So lots of great rental markets in Florida, lots of great rental markets in Georgia, Tennessee, and North and South Carolina. If you're looking for rentals, great markets, obviously, in Texas as well. Other different markets that are good. I like Wyoming personally. I buy in Gillette. I buy in Casper. Those are great markets. A lot less people. I mean, there's under 600,000 people population in the state. It is mostly federal game land, but a great market to be in. Montana's priced up a bit. It has been priced up quite a bit. And it's harder to cash flow rent depending on where you are, but you can find several markets in Wyoming to cash flow rent. And the real estate taxes are very low, and it's a no income tax state. So the states that I'm really focusing on and have been focusing on this year will continue into 2023. I'm going to focus on where I am here in Florida, Tennessee, Texas, Wyoming, and they're all zero income tax states. So those are going to be my main focus. Those are going to be most of my buy and holds. The other states I'm going to look at for basically wholesale, wholetail, Carolinas. I'll look at Alabama, Louisiana, Mississippi. I've done a lot in New Mexico this past year, but some of those deals have dried up as well. I'm going to steer clear. The markets I'm going to steer clear of Utah right now. I'm going to steer clear of Idaho. Always steering clear for the most part of California. There are some deals. I'll do a deal a year, maybe there, or every other year. And the other markets to avoid, like right now, outside of Chicago, is slowed quite a bit. So Illinois and the suburbs, far out suburbs, way outside of Chicago. Suburbs of Chicago are great. But going further out, southwest, and those markets are not going to be quite as good. And so those are the ones I'm going to focus less on. and especially New York. I don't like what's going on with New York. And New York is a very difficult market to work in anyway. I'll avoid Vermont like the plague. There is out-of-state tax of around 15% and the land gains tax, I believe, of around 12.5%. So you get hammered if you take a property down there if you're not doing an assignment of contract. So I won't buy there. Most of the Northeast, I'm not going to buy. If I found a deal in the Boston area, I would do that, but I'm not going to go crazy looking for them there. There's just too much you have to worry about. There's too much taxation there, too many people leaving that area, moving to the Sun Belt. So focus on the Sun Belt, especially if you're new. Focus on your backyard, focus on markets, and then focus on the Sun Belt. If you want to build a rental portfolio, and if you want to build a rental portfolio out of state, I'm going to say the best way to do that is to find a good property manager. And I like realtor property managers, ones that already do manage some properties, have some good experience. They've generally been best rather than the big box guys. You don't get as taken care of quite as well with them. So focus on those. And if you can, focus on the zero income tax states or the ones with low state taxes, low real estate taxes, affordable cost of living. Like I said, the Carolinas are great, both of them. Georgia, also Indiana and Ohio, great markets. Michigan, great market. Missouri, Oklahoma, parts of Texas. Texas does have some higher real estate taxes, so you got to be aware of that. You got to be outside of the bigger cities there, and in more rural areas to get more cash flowing rental properties. Areas like Waco, Texas is pretty good as well. They do have higher real estate taxes, but they're not so bad. Like Dallas is, and Austin, and Houston, some of these other big markets out there. So those are the ones to focus on. I would say that's your best bet, and definitely keep a pulse of what's going on in the market, where inventory is increasing. If you are focused on different markets, have a realtor give you at least weekly updates of inventory. And if not daily, to see what's going on. You really want to track this. When you start seeing a spike in there, that's going to be time for you to really hit the brakes in that market. Slow it down for a little while. dial it in, and maybe focus on another market and see where the shift is going. Because we had that bump in rental rates. Why do we have a bump in rental rates? Well, it's pretty darn simple. It's been going up over the past few years, right? But what happened is you double interest rates, go from 2.75 to 6%, which they did for a little while. Now they're back down to 5.4. You knocked a lot of buyers out, a lot of buyers. So those buyers become renters. So what's that do to rent? The demand, right, pushes up. You have limited supply. Basic macro factor again, right? Basic macroeconomics. Low supply, high demand, rents go up, meet the market. And that's simply what's going on there. So know that if rates continue to decline, the rental market, expect that to pull back a little bit, especially as ones that went up hyperbolic, not the ones in the Midwest, not those linear markets, but they're going to pull back slightly. Rents don't really drop too much. They never really do. They're kind of like wages. Wages don't really drop too much, but you'll get a little action back here. Hopefully this helps you guys, and I'll catch you on the next one.